That, things like the Circle IPO are going to be less and less relevant in the future because, as you say, what is an equity, what is a token, doesn't matter. Because once the regulation is cleaned up, they can accrue rights, they can accrue dividends or economic rights, whatever it may be. The question is, what is a token? What is equity? What happens in M&A? What happens when tokens don't die? Equity does die. What happens when a line of business goes bust or whatever? It's just, there's still a complexity around what the hell this thing is. Decentralizes asset management at scale as well, because of different people have different skill sets. Commodity trading houses are very good at certain things, whether it could be currency overlays, and then before you know it, you're getting their currency overlay from you because they offer a token that offers it, which is extraordinary.
Hey guys, welcome to Everyday Finance. Right now, a big event is happening that could change the whole banking system. Bitcoin has gone up almost 50% in the first half of 2025. Doing better than both gold and the S&P 500, Ethereum is not far behind thanks to strong interest from institutions and ongoing support for liquidity. Raoul Pal, CEO of Real Vision, says that these changes are caused by a rise in global liquidity. He sees this as an even more powerful factor than earnings, prices, or interest rates. As a result of central banks' efforts to boost the economy and keep real yields low, capital is moving into riskier assets such as crypto. This is partly because of rising population and low output. Pal says that crypto could be the core of tomorrow's banking system because AI and blockchain technologies are improving so quickly, where they think crypto may be going in the next few years. Make sure you watch all the way to the end.
And does that not also apply at the larger market scale, the corporate treasurers and stuff like that, who have a complex set of needs and they want to maybe break apart some of the component parts, as you said, because this composability, recomposability element of tokenized portfolios means that they can strip out, let's say they don't want any more whatever exposure, Swiss exposure, because whatever reason, and so that they can just retool whatever their money market fund or whatever their holdings are.
That's right. I think that's going to be the next big step that comes.
Because if not, they right now would buy a fund.
That's right.
And what's in the fund is their problem. They might have to hedge against some of it if it's against their mandate or they don't need it or whatever. But this allows them to personalize that.
That's right. And the way they hedge that out today, Raul, as you know, right, is through all these overlay strategies and option strategies that actually cost them a lot of money, right? That can leave, that really up the expense of managing these treasuries. So I do think that that's going to be a big next step. And then I think beyond it raises even a bigger question, right? Which is, if I'm tokenizing an exposure and that exposure is sitting in a token, why does it have to be an equity, right? I do think we're going to see a complete rethink of the capital raising ecosystem coming from these big institutional players. And let me make it super simple, right? On Amazon, right? Why do I have to bundle my Amazon retail services and my Amazon web services and my Amazon logistical services into one stock price, right?
That's right.
Why not have 3 tokens that give exposures to different parts of Amazon's business? And that immediately gives me, as the management team at Amazon, more insight into how the market is looking at how I'm managing my businesses as well. So I think that this idea that we need an equity to have exposure to a company is going to really come under challenge in the next few years, because there's more efficient ways for me to be raising capital for parts of the company that make more logical sense for each other. And I think that we're going to see the issuance of new types of corporate exposure tokens pretty soon. Like, I think that once people get comfortable with this idea that a token can hold any type of exposure, the need to issue an equity and be a public company and be subject to the exposure and all of the scrutiny that public companies get, we might see a real shift in thinking around how do big corporations raise money in the future.
And also, what does it mean for VC? What does it mean for private equity? We've seen, Robinhood is blurring that boundary really fast, and Republic and a few others are, which are tokenizing private vehicles like SpaceX.
Yeah.
Okay, that's interesting. The later stage, but what basically a lot of crypto is already is just early stage that is tokenized as opposed to equity, and some do token and equity to make it even more confusing. But it feels like the capital markets are changing structure in front of our very eyes. That things like the Circle IPO are going to be less and less relevant in the future because, as you say, what is an equity, what is a token doesn't matter, because once the regulation is cleaned up, they can accrue rights, they can accrue dividends or economic rights, whatever it may be. And therefore, my idea for a long time was using a company as complicated as, let's say, Exxon.
Yeah.
A lot of people just don't want to invest straight up in an oil company, but they've got hundreds of different businesses within a company like that. And to be able to break it down, it becomes a much better business for a CEO to run because you've got more efficient capital allocation because the market's giving you signal. You can decide what needs capital, what doesn't need capital, all of these things.
Well, and, to build on your point, because I think you're 100% correct, Raoul, and to build on that point, one of the most difficult parts for these corporations is how do I fund sufficient research and development while making sure that all of these different businesses are funded adequately to grow? And I think that opening up research and development, is going to be huge, right? Because a company really has, if you think about it, all the different stages of investment in it. You can have venture through their research and development arm. You can have early stage through new business launches. You can have growth stages as new businesses really start to become a more important part of the company's economic ladder. And then you can have later stage and value portions of a company based on their most successful and most established business lines. So, you could actually really start to break every company down into the full range of the equity markets and trade every part of that ladder within a single company.
Yeah, and Google's another great example. Alphabet's a great example of a company that people would love to be able to invest in some parts of and not other parts of because there's some really interesting stuff. The issue I've got with all of this is the question is, what is a token? What is equity? What happens in M&A? What happens when tokens don't die? Equity does die. What happens when a line of business goes bust or whatever? It's just, there's still a complexity around what the hell this thing is.
Yeah. Well, this is where I think the programmability of tokens is going to become the real focus of discussion. Right. We've kind of treated tokens as this kind of very generic wrapper, but a token is a lot more than a wrapper, right? A token is programmable. And with many of these blockchains that they run on, you can have smart contracts. More and more of these blockchains are bringing agentive AI into the monitoring and the administration of their smart contracts. And I think at that intersection is where we're going to start to really see some sophistication build into the marketplace. So if you think of the early days of crypto, it was buy or sell, right? Then we started to get derivatives. We started to get perps. We started to get staking. We started to get all of these new models that made this very basic marketplace increasingly attractive and opened up more and more opportunity. And I think you're going to see the same thing happen around the wrapper of the token itself, right? We still think of a token as a pretty straightforward wrapper, but it can be much more, right? It can almost be I hate to use the term smart wrapper, but you can start to program it and you can start to say, if business profitability falls below X, this becomes a distress token and new rules come into effect. Or, if you hit a certain stage of growth, this is now going to switch from being a venture token to a growth token.
Since the financial crisis of 2008, central banks have pumped trillions of dollars into the world economy through stimulus and debt. This has increased global liquidity by about 8% per year. Fiat currencies have slowly lost value because of this steady flow. This has made traditional assets like stocks, real estate, and even gold fight to keep up. Bitcoin, on the other hand, has always done better because it was made outside of the financial system and with scarcity built in. It can't be lost when currencies fall in value, which hurts other assets. At the same time, governments are taking on even more useless debt, which is again paid for by cash flow, because people are living longer and having fewer children. Raoul Pal says that focusing on crypto could now be the smarter and more practical thing to do in this situation.
Yeah, I mean, it's super interesting. And just thinking about, the centralization of the big corporations or the decentralization of a tokenized corporation, right? And then the ability to what kind of portfolios, to go back to your previous point, is like, okay, now what does your portfolio look like? You can have oil income streams and real estate in Manhattan, and you can have crypto exposure, and you can have some tech exposure. It's like it becomes super defined in what you can do in a way that does not exist now.
Well, and you can be very deliberate, right? Like you can really start to get down to what is my specific goal, right? What do I need? How much money do I want to have in retirement? And what is going to be the fastest way for me, for my portfolio to get me there, right? And it can isolate different income streams that have different like degrees of confidence about their repeatability. You can have high risk income streams that might pay off much more than you think versus completely conservative, steady income streams. Like we've used bonds as just a fill-in for what could become a much more nuanced ecosystem around how do you create income in a portfolio, right? I think that's just one example of what might change so profoundly when you have all of these very distinct and very targeted opportunities that you can utilize to build the portfolio.
Sandy, the other thing that makes me think, and we touched on it before, is the nature of the capital markets and how you raise capital changes. Because now you can be a technology company or a manufacturing company who say, I want to raise money for a specific thing, and it's not a generalized pool of capital, and people get access to that specific return. So it creates a lot more specificity, which is an easy word for you to say, difficult for me to say, in capital raising as well.
Yeah, and I think that is where I think the new thinking around how do I manage an organization. Forget it doesn't have to necessarily be a company, because we're seeing the same thing come up with these foundations, right, that are running the different blockchain-based businesses. How do I think about my goals as an organization? And how do I think about opening up participation and ownership in a new way, right? Ownership used to only be, I could own a share in the company, but now ownership can be participatory as well. And so, I might actually want to use expertise from outside my organization and offer people with that expertise benefits through having special classes of tokens for people who contribute to my projects, right? So it could even change employment.
Let's say Microsoft have the world's best corporate treasury, let's say, and they could then just basically tokenize that ability to manage it for other corporations. It kind of
exactly
decentralizes asset management at scale as well, because of different people have different skill sets. Commodity trading houses are very good at certain things, whether it could be currency overlays, and then before you know it, you're getting their currency overlay from you because they offer a token that offers it, which is extraordinary.
Yeah, and it becomes a marketplace, right? Your idea marketplace, your capabilities marketplace grows to such an extent. I mean, today we have maybe 1,000 investment firms globally that are managing money, 2,000 firms globally. Right? You could have hundreds of thousands of specialty firms that are each offering their own expertise that you can access and put together into a portfolio of services. So it really this idea of decentralization, right, goes much further than we've been thinking about it today, right? We're at I think just the very, very beginnings of unpacking what a decentralized economy might look like.
The other side of it is everybody wants to tokenize their funds, whatever fund it is, equity funds, private equity funds, real estate funds, all of that stuff. A lot of them just want to do it to get to retail because they want to scale, particularly the private equity guys. But it feels that, talk me through where's your head with the tokenization of the kind of existing fund business. and then we'll talk about what it might look like in the future, because I think we're pulling on this thread that whatever we see today and whatever tokenization happens is not where it's going.
Yeah. So I think for today, the way I look at it is I think it's going to be a barbell, right? I think that the reason that there's so much interest in tokenizing these private funds isn't so much about the fractionalization of those fund exposures, or isn't so much about this ability to democratize access. I think a lot of what's happening in the tokenization of the private fund space is about creating operational efficiencies and creating some ability to share standards, share information and share data in an industry where there's no real standards. So it's very complicated to onboard different private funds today to, say, a big wealth management platform, because each private fund has its own documentation, its own data fields, its own way of creating valuations, its own way of calling for capital. There's no standardization whatsoever. So by tokenizing some of these processes, I think a lot of people see just adding efficiencies and taking costs out of the private marketplace. And even if you're not using it to provide direct exposure, there's lots of opportunity there.
The economy isn't going through a normal cycle anymore. Productivity falling, the population getting older, and debt rising. Lawmakers have repeatedly turned to the same solution, adding more cash to the economy. The value of fiat currencies is slowly going down because central banks keep increasing the money supply and lowering prices. This might not always show up in the overall inflation rate, but it's clear when asset prices go up. Stocks, real estate, and other traditional assets aren't really growing anymore. They're just keeping up with the loss of money. Crypto, and Bitcoin in particular, is unique. When looked at through the lens of liquidity, these assets have always done better. Crypto is well on its way to becoming the most important type of stock if this trend keeps up.